All right, there we go. Now we got some volume. Hey there, everybody. Christopher Inks with Texas West Capital. It's just a few minutes after 11 a.m. Central Standard Time here on Friday, the 9th of December, 2022. How are y'all doing? We're coming at you live here from just north of Houston on Lake Conroe. Good to have you guys checking in. Oh man, you'll get some crazy weather over here, I'll tell you. I mean, it's Texas. We generally have some, we basically have two seasons, spring and summer. Summer and winter, I guess you could say. And they seem to happen in the same week usually. So lately we've been having these like 80-degree days. Oh man, my son and my nephew jumped in the pool the other day. And even though it was 80 degrees out, that pool water was cold. They didn't last more than about 45 minutes and they were back out. But anyway, good times. How are y'all doing today? I hope you're doing well. Guys, I've been talking about, we've got our LMT mentor program. It starts up December 28th. You can still get in on our holiday sale right now. Just go to howtotradetowin.com / let me see, howtotradetowin.com / holiday sale. Oops, I almost put Dale in there. I don't know anybody named Dale. You jump in there, and then, you get all the information here. By the way, I've told you guys for years that we have the most incredible members, right? And this isn't the first time this has happened, but we had a member just yesterday, I believe it was, donate $950 to the next person that signs up and joins the mentor program. They've been with us a while. They believe in us and in what we do here. They continue to remain a member. They're in the mentor program, and they would like to help somebody else get in. So, I mean, man, oh man, kind of crazy, right? Absolutely amazing. And so what I did was I said, okay, well, I'm going to match that. So the next two people that join in will both get $950 off the program. And so, just come on over here. There's an email on this page here that says if you need a payment plan, we're doing a payment plan as well. I'm also working with another outside financier to offer different payment plans, but I'm not going to check your credit. I'm not going to check your job. I don't care where you live in the world. I'll be able to finance you according to the terms here. But yeah, use that same email address and just send me an email and let me know if you want to jump in. It's first come, first serve. It's only the first two people, but man, oh man, absolutely crazy. I tried to get them to let me tell you who they are. They said they want to remain anonymous. It is what it is. It's okay. But man, I'm telling you guys, we've got amazing people in here. So we're really excited about this. Again, you're going to learn my very, very profitable day trading system that I use personally day in and day out. I've used it for years now. I've never taught it before. It's the first time. But I think more importantly, what you're going to get for this, it's a year-long program, guys. And what you're going to give is weekly coaching sessions. You're going to get a workbook to help you work through a lot of the emotional and psychological things that are holding you back, keeping you from being successful. You're also going to get access to Tier 3 for the year. Tier 3 is our flagship kind of product thing we got going on there. That gives you 3 live streams a week. Mondays, we talk about Wyckoff. Wednesdays, we talk about price action concepts. And Thursdays, we talk about Elliott Wave. And my reason for doing this is because I believe those 3 things are if you can learn those 3 things, it's going to completely change the way in which you view the market. Beyond that, you're also going to learn, deeper down into the whole idea of socioeconomic theory, which is something that I actually came through, didn't know it was something until I read Prechter's book a few years back. And I said, man, it took me freaking, 2 decades to get to this point where I'm realizing this exact same thing. It's like he went in my head and wrote exactly what I was thinking. So I'm a real fan of it, and I'm going to go really in depth over the next year with our mentor enrollees here and really kind of explain how it works, explain why it works, show examples over and over again. Because I'll tell you what, guys, if you can get onto that concept, if you can get on and deep into it and understand it, it is, again, going to completely change the way you look at the markets. You're going to start getting in before things take off rather than chasing them after they do, right? So no more getting in at the tops and exiting at the bottoms. You'll be much better prepared, right? So we got so much more on there. Go ahead and jump in there, guys. Check it out if you want. No hard pressure sales, whatever. At the end of the day, guys, I honestly believe, you kind of look at things, you go, okay, well, how much is this going to cost me not to do it? How much am I going to potentially lose? How much would I be able to make had I done this? How much am I going to lose if I don't do it? And you know what? If you're somebody who believes in your ability to produce, if you're somebody who believes in your ability to make things happen in your life, to affect change, positive change in your life, if you're not a victim, right, and you believe in these things, I think you jump on that and you get going and you rally it, right? You just ride it hard, right? Anybody that's been with me for any length of time knows that I am like, I don't know, guys. A lot of times you get out there and people are kind of, they're just trying to sell their thing and that's all they care about. But there's a reason our people stay with us for years and years and years and continue to remain members. I can sit here and tell you all day how great what we do is, especially if you're open-minded and ready to do it. But, I think the proof is in the pudding, right? It's in the fact that people stick around. You're going to go out there and people talk smack all day long online, guys. Most of them never even have been in the program they're talking crap about, right? But again, our people tend to stay in for years and years and years. And, and not all of them do. There was one guy left a great comment one time. He said, it's the only thing like this out there that obviates the need for you to do it. He says, I was in for 6 months, canceled my subscription, I sleep better, all that kind of stuff. It's down on this page here. I got a whole bunch of, reviews and stuff on there. But, I don't know, guys. Again, online, just in life in general, people are just scared to do things. They're always, and they always use the word scam. And I don't know necessarily that they're scared that it's a scam. I think they're scared of their ability to be able to do it. But, I'm going to jump up here, do everything I can to make you as successful as possible. Also, we're always adding things. If you're jumping in here, like I said, you get other things. I'm going to release 2 books. I'm working on 2 books right now, trading books. One's trading psychology, and the other one's just on trading wisdom. So I'm going to be releasing those next year. You're going to get copies of those. Man, so much stuff going on there. But one thing I'm working on at the moment here is to also get a life coach for you guys that are in the mentor program. And what does that mean? That means because as I tell you day in and day out, and as I firmly believe, how you view life is how you're going to do in the markets. If your life believes that you're a victim and that you can't, that something's always happening to you, the world happens to you, right? You can't possibly come in and be a successful trader. But you can use a life coach to help you move through that, to help you become more proactive rather than reactive, to understand that you can affect change, positive change in your life. And in doing that, it's going to make it much easier as a trader to make money, to consistently be profitable. It sounds weird, I know, but it's all in the mind, guys. It starts and ends in your head. It really does. So we're working on that right now in the moment, and as soon as I can get that all set up, guess what, guys? There you go. That's added to it, right? So anyway, I'm really excited about this. By the way, if you guys caught my tweet this morning, we keep growing. And so the next step here now is to open some office space over in the Woodlands. So Woodlands just north of Houston, on the north side of Houston there. And so we're going to be looking to do that hopefully much sooner than later here. Coming up, we're going to start looking. And then we'll be able to do more of what we do, including in-person education, in-person training, stuff like that. I also talked about once we moved over here to Houston, I'd like to get involved and start a meetup or whatever. That's going to be something else I'm going to look to do. So if you're in the Houston area, or if you're in maybe San Antonio or Austin, and that's something, especially in Austin, right, just an hour and a half away, and you feel like that's something that you'd like to join in on, College Station, something like that, all these kind of areas around, man, oh man, let me know. I would love to have a list of people that I can let you know, hey, listen, we're going to start doing this here. And, just get out there and meet you guys, man, right? And talk shop. So many things. And we've got so much more coming out. You guys don't even know what's coming at you. But we are expanding probably a bit faster than we can handle at the moment. I'm also in talks with a few analysts right now to hopefully bring them in, and that'll increase the content. I mean, if you're in Tier 3, you already know it's a lot of content. But it'll be even more when we can get them in. So lots of stuff going on, guys. Wanted to let you know, man, oh man, I hope you guys join in. We'd love to see you there, okay? Who's here already? Arrow Quinn, what's up? First in chat, he says, man, I'm going to start typing first in chat. I gotta, I can cheat. I can get in there first, right? Bamboo, what's going on, man? Mark Gennard is here. Eric Quinn says, let's hope the Santa rally will continue. I think it will. We had PPI released this morning, right? Producers Price Index. And then it has to do with CPI and whatever. And that came in a little bit hot, but overall, it came in as it continues to slow. And I'll talk about that in a bit. So, again, I think everybody out there on social media and whatever, they're all talking about reversals and stops and all these things. And I keep telling you guys, what's important to notice is it slowing down? That's the most important thing. Because if it's slowing down, then you're going to get to the pivot. You're going to get to the reversal on things, right? But everybody's so worried about, is it going to keep rising or is it going to pivot? They completely don't understand there's an in-between that can give you a clue as to what's likely to happen. So PPI, again, surprisingly upside a little bit today for November. But overall, I think it's like the 5th month of a decline still. A year over year. We're talking about year over year here. It's a year over year decline. I can't even say it. But we'll talk about that a little bit more. Who else is here? Dominic, what's up? Says, great content. Appreciate your work. Man, well, I appreciate you checking in and saying such nice things. I really do. Again, guys, when you guys say something nice or whatever, I really appreciate it because, generally we don't tend, myself included, we tend to talk about things that upset us or frustrate us or bad situation we have, right? We rarely tend to talk about those things that are positive. And so I know you have to go out of your way to actually say things that are nice, right? It's not something that naturally comes, that comes natural for most of us. So I greatly appreciate it when you guys do say stuff like that. It lets me know that you get what we're doing. And I appreciate that. Nevlusian, Data, good to see you guys. Fiboswani, what's up, man? It is well. You guys, I think Fiboswani said he recorded something with Crown earlier today, and so Crown, I don't know what that is exactly, Crown Crypto or something like that, I think. You correct me there in the chat if I'm wrong, Fibo. But that's going to come out, I guess, sometime today, so you guys might want to check that out. I had a great conversation with Mr. Fiboswani there via Zoom chat the other weekend, and just, man, what a great guy. And he really kind of sees the market psychologically and whatnot, like I do, which is really great. He works it a little differently, right? He has a different approach. He has a different system than I do, but it tends to get us pretty much to the same places. And overall, his outlook on the markets tend to align pretty well with mine. So, of course, I'm going to say, man, you guys need to follow him if you're not, and check out that show there when that's released. I know I will be. Deadly123, what's up, man? Happy Friday. He says, I'm taking a nice little vacation starting this afternoon. Hope everyone is having a great one. Man, that would be great, right? I hope you have a good time there, man. Fibbo says he's just north of Houston in Kentucky. It's a little bit more than just north of Houston. Let me see here. Deadly, you went back and started rewatching all the Elliott Wave videos? Yeah. Yeah, guys, if you don't know, I've been doing this. It started out as once a week with our tier 3, and then we moved to 2, and then we moved to 3, so we got all these 3 things. Well over 300 hours of videos. I think on Elliott Wave alone, we've got like 70-plus sessions on that. So, yeah, looking at charts, discussing the important things to remember, reiterating the things, just to kind of help you guys be better traders, for sure. Prector's book is a must-read? Agreed, yeah. Let me see here. Bill, what's up, man? Good to see you checking in, buddy. Been a while. He says 80 degrees. We've got minus 5 degrees Celsius. That's 20 degrees Fahrenheit over here. Oh, man, it's kind of cold there, man. Yeah, we've been a bit warm over here, buddy. Anyway, it was cold for a while. I mean, it was down 30s, 40s for a week and a half. And then all of a sudden this 80s nonsense came up again. But this is Texas, so... what's going on, Hank? I need to really organize my mail. Man, you saw how much email I've got? There's no way. I just gave up. I try to keep up with the important stuff. Greg, if you're watching, Greg is my media guy. Man, you saw from yesterday evening till today, all the calls and text messages sitting on there, right? That's why I have trouble getting back to you right away sometimes, man. So now you see. I'm gonna have to hire somebody to take care of all that, right? Let me see here. Deadly says there's nothing at all that involves scamming. Oh, scamming with Texas West. This is education 100%. Man, I appreciate you saying that. Deadly's been with us for a while. So, again, guys, people like him and a lot of the people that are speaking in here, are people that have been with us, and they choose to remain with us, guys, years after year, and there's a reason for that, right? So, yeah. Debate Crypto, what's up, man? Good to see you. Oh, man, let me see. Who else is here real quick here? Chad, love this service. Been in for about 6 months and value far outweighs cost. Man, I appreciate you. Thank you so much, man. See, it's like, man, I don't even know what to say. I mean, I know I offer good service here, and sometimes we have growth issues, because we grow a lot quicker at points. And I honestly didn't have all the support that I needed from when we've made these growths, which is why I'm on this hiring thing and whatever right now. But yeah, man, just it's legit, guys. I'm here. I'm really here to hopefully help you get to the point you need to be. But at the end of the day, just like anybody else out there trying to help you with anything in life, all we can do is lead you. We can just try and say, listen, this is where you need to go. This is how you get there. These are the things you want to, miss on the way, the things you want to ignore on the way, sidestep, right? But you actually have to put in the work. You have to take the steps to do it. You have to make the decision that you're going to do it. You can't just come in. I honestly, guys, if you're just going to come in and then not put forth the effort, that's a waste of money for you. I don't want you to do that, okay? I put a lot of effort into what I do with TWC and with our members and everything. And so if you're coming in, I want you to take advantage of that and jump on that. But I don't want you to come in if you're not going to be serious about it, because it's just a waste of money. And that doesn't help anybody, right? I know it's crazy, a business telling you, hey, don't spend money with us, right? But really, it is what it is. Because then you'll feel bad about things and you feel like you wasted money, and because you haven't done anything, right? I don't want you doing that, man. I want you guys to get on this and be excited, because trading gives you a great life if you learn how to do it correctly. But it doesn't happen overnight, and it's not something you can instantly change your thoughts and processes and everything. So yeah, man, lots of stuff like that in there. Kimazabi, what's up, man? Is that a Cleveland Indians logo there? He says PPI showing is the change in behavior to tell you to watch closely. Agreed. Like I said, I think it was like 5 months of year-over-year decrease. So even though we were like 7.2 was the expectation for PPI today, a 7.2% increase year over year. We got 7.4%. Now we'll talk about inside that here in a minute, how exactly a core CPI and stuff like that, how that all kind of fared out. But at the end of the day, it's 5 months of decreasing. I think last month, the October reading was like 8% year over year. So we're down 0.6% year over year from the previous month. And this is 5 months continuing down. So again, you're looking for the slowdowns, guys. You shouldn't be jumping on oh gosh, where's the reverse? If the slowdown's happening, the reverse will happen at some point, right? But what you need to pay attention to is that slowdown, because if all you're worried about is the pivot, if all you're worried about is reversal, then you're going to continue to be bearish as heck while everything is telling you need to probably be watching to see if a bottom's forming. But, again, most people don't get that, right? They're really hung up on the absolutes, right? Don't be hung up on absolutes, guys, okay? Bill says he's north of Houston and 5,000 miles east over in the UK. Yeah. Let me see here. Hank, you sent me a link to an automated email organizer. Great, man. I will get to that as soon as I get some time. I appreciate it. Curious to hear your forecast on crypto mining stocks like Riot over the next few months. Do you have time to talk about that? I think that'll probably be a good segue into it. We're going to talk about, there's a little news thing about crypto miner hosting and whatnot going on that I think we can probably segue into that. So yeah, it is a Cleveland Indians logo. I'm Native American and happen to live in the Cleveland area. Man, hey, what's up, man? My dad, his side of the family is actually from Cleveland. So man, oh man, kind of crazy, right? All right, guys. So here you go. Like I said, you could join us over here at howtotradetowin.com/holiday-sale. Get in there. So not only is it discounted for the sale, but like I said, the first 2 people that contact me via email, don't just purchase, contact me via email. So that way I can give you the discount, right? But you're going to get the $950 discount. Again, one was given by one of our members. They wish to remain anonymous, and I have decided to match that. So we've got 2 of those $950 discounts for the next 2 people, that is. Okay? Brian, what's up, man? Good to see you. Let's jump in. Well, real quick here. So, we were talking about, the slowdown, and we're talking about Fed pivots, right? And so, Fed pivots. Well, now this, So earlier today, I posted an update, or maybe it was yesterday. This is the CME FedWatch tool, okay? This is the market putting their money where their mouth is, right? And so the market is saying there's a 77% chance the market believes that we're going to see a 50 basis point rate hike in December. 23% chance of a 75 basis point rate hike, okay? So still, obscenely on the 50%, on the 50 basis point rate hike here, right? And that's after, a big part of that was that dovish Jerome Powell. We talked about it a few weeks back. Jerome Powell was definitely dovish, especially compared to how hawkish he's been for months now, right? And this 77% chance is in spite of the surprise jobs report to the upside and the surprise, PPI to the upside, all this stuff, because all those metrics are coming down, guys. Even though it was a surprise to the upside in the jobs report, the month over month is a PPI, for instance, year over year, they're still showing a decline, right? So the jobs, even though there was a few more jobs basically that added than expected, overall it's still in that strong downtrend. So less and less jobs are being created overall. And that's important. You want to see. So if the Fed's looking at it, they're not saying, just this one thing, just this one number is all they're looking at. What they want to see if they believe they're having an impact on the market, right, is they want to see a decline in these things. And that's exactly what we're seeing, guys, for almost half a year now. So, these are what's important to really watch, not worrying about, oh my God, it missed, so now everything's going to go up. I mean, it could still be a 75 basis point rate hike. It could still. But the market believes it's 77% of a 50 basis point rate hike. I think that's probably right as well. So speaking of that, let me see here. Got a couple of things I want to talk about here real quick. Where is it? So we've got this Wharton professor, Jeremy Siegel, says stocks are set for a big rally in 2023 as productivity rises and interest rates fall. This guy is actually throwing up the possibility. He's saying he believes in a 50 basis point rate hike in December and potentially no rate hike at all in February. Now, I don't know that I'm quite that bearish on the rate hike. But, man, oh man, I guess you heard it first here, right? If it happens. So what he's seeing is, again, what we've seen this year, the last year now, this strong decline in stocks, right? So, November of last year of 2021, we saw that the NASDAQ topped out, and then that was followed, in January, just over a month later, it was the end of November, beginning of January, with the Dow and the S&P, right? So basically, we've had a year of decline, and he's saying, with the numbers are coming, and then now he's also saying the same thing I am, with the decline in these indicators, where they're going down. He thinks next year will probably be a pretty good year. He thinks again that we're going to get that reversal. I guess that would be. Like I said, he's suggesting potentially even no rate hike at all in February, which would be crazy, I think, but definitely possible, especially as the numbers come out, for the next few months. But then he's seeing some stock market rally next year, and again, we talked about that, right? So the Dow popped up over that mid-August swing high there, right? That retracement. We're waiting for the NASDAQ and the S&P to follow suit and confirm that, right? But if we're doing that, that's a 3-wave down. That looks like 3 waves down, guys. And if that's 3 waves down, it's corrective. That means new all-time highs incoming. And I know that's hard for a lot of people to wrap their heads around. But I think it's quite possible, again, as I've been talking, we didn't have any kind of real blow-off top. Not with crypto, not with stocks, right? And so if we're supposed to, especially in stocks, supposed to be at that grand super cycle top, which is a 5th wave of a 5th wave of a 5th wave of, et cetera thing, right? This is like the epitome of euphoria, right? We should see everybody buying in this big blow-off top. So we didn't see that. So as you guys know, that's what's kind of tempered my idea that maybe we're not. I was been talking about the top being in, right? Potentially coming up into it. But that lack of follow through, man. And now we're getting this rally here. I think there's a lot of things in this story, a lot of moving parts that kind of really are giving this narrative that maybe we've got a new all-time high coming in first before we really have that big hurt. So I'm going to watch that. We're going to continue to watch it. We're going to continue to trade short term, looking for that bigger move, right? Let me see here. What else we got? We've got Grayscale, man. So this is funny. I say it's funny, right? Hedge fund sues Grayscale for data on battered Bitcoin trust. Basically, they're upset because Grayscale stopped the redemptions, right? They got this huge discount going on. They weren't very upset when there was a huge premium and they were making a ton of money off it. They got into this knowing the redemption thing and all that, right? I don't know, man. I think it's just you going in there and crying because you're not getting all the easy money that you joined and were getting at the beginning, right? Because you guys will remember we talked about the way, man, a couple years back, right? We were talking about everybody, the way the big hedge funds and everything were doing, right? We're making money on that arbitrage, right? On basically on that between GBTC and spot Bitcoin because you had that premium, right? And because when you get in, you have a certain period you have to wait for redemption. I think it was 6 months was what it was. And so guys like this were coming in making a lot of money, making stupid money, just hand over fist so easily, right? It was rinse and repeat over and over and over. And now we're at this huge discount and they're like, it's not fair. Well, go cry. Go cry to somebody who cares. Now they are bringing it into Delaware courts, right? And Delaware is usually granting this type of thing. So, like I said, this is Fir Tree is the hedge fund. They're alleging Grayscale's redemption bar, which dates from 2014, is self-imposed. The hedge fund says there's no legal reason that stops the trust from allowing investors to exit as long as it complies with security laws. Grayscale has said in regulatory filings it can't offer an ongoing redemption program. And so the hedge fund is claiming that they're going to refuse to do it because it cuts into profits. The firm sold an immense number of new shares between 18 and 21. It charges 2%, higher than competitors such as Osprey Bitcoin Trust on the market value of its Bitcoin holdings, rather than the lower market price of the shares. Last year, they collected $615.4 million in fees, they said. So, and here's the thing, guys. A lot of people are talking about Grayscale, the Bitcoin Trust, being, liquidated, basically, right? This right here is telling you why it's likely not going to happen. It could be sold to somebody else. I could see that potentially happening, right? Because everybody's worried about Genesis, the other arm of the parent company, right? But this thing is worth, $615 million in fees last year alone, right? This thing is worth more whole as it sits than it is breaking it down and selling Bitcoin. So if I'm you, I'm not really worried in them selling all their Bitcoin. Everybody's worried about that being supply coming in. This continues to be the reason I've talked about that. I don't believe that that's really the likelihood of what would happen. If it got to that point, I think they would sell it off as a business, as a whole business there, because it's worth a lot more with those management fees in there. So, yeah. Let me see here. Oh, let me kind of catch up with you guys here. Siegel smoking the good stuff. But you know what? Man, crazier things have happened, right? So I can't say, oh, no, he's an idiot. But, man, oh, man, I think it's a bit aggressive for what I'm looking for. But, again, guys, what? A year ago, almost, to January of last year, I outlined what I thought would happen this year, right? And we got everything right up until dropping to the 50 basis point rate hike, which hasn't happened yet, which might happen in December. And I was looking at, beginning of Q4, right, which would have been October, right? So a few months off on that. But, man, everything was high there, topping out, housing, everything else like we talked about, running into summer. We talked about the big rate hike, 75 basis point, maybe even 100 basis point rate hike through the summer, which is what we got. It's just kind of ran on a little bit longer. And then, I was talking about the fact that we'd run into Q2 and Q1 and Q2, and we'd see that decline, with the 50 basis point rate hike, maybe a few times, and then the 25 before we get a, potential pivot, maybe right prior to summer, right? And he's actually, he's basically saying, hey, it's probably going to happen Q1. So he's a quarter ahead of me. But nonetheless, you guys have known since last January what I was thinking was going to happen, and other than kind of extending the 75 basis point rate hike for a bit longer, I mean, it's pretty much ran what we were saying, right? So we'll see how it plays on. But man, oh man, definitely, you know, this I just see a hedge fund crying. They lost a lot of money. They made a lot of money, I'm sure, the previous years because they were again playing that game with the arbitrage, with the premium and everything. And now they got caught. Now they got caught in their game. They got stuck in their game and they lost money and they're losing money, right? And so now they're crying. Somebody listen to them. Oh, help me, help me. Yeah, whatever, right? Yeah, so what's going on, Baltazar? Always good to see you checking in. So that's that right there. We were talking about, somebody was talking about, actually, you know what? We're going to talk about that here in a minute. Let me see. Let's see, that was Siegel. Let me see. Here's another thing. So, you know, another big pronouncement, right? Can you guys guess who's saying 250,000 here? Everybody's favorite Bitcoin bull, I guess, here. Let's come on down here. So it starts here talking about, let me see here. They're looking Standard Chartered. They're the ones that said they expect it to crash to $5,000 next year. Okay. Now there's technical points on the chart that make sense for that, but it's got to get there, right? And so I think if you know, as I always say, you know, yes, you keep technical targets in mind, but pay attention to what's going on, right? Because you don't want to be that person that's bearish as price continues to rally and you're getting in 300, 400, 5%, 500% higher when you finally get in, right? Especially if that's going to be, you know, the top before a decent pullback. This is what retail usually does, right? So they're looking at that. And then, of course, we got Tim Draper here, right? He says, I've extended my prediction by 6 months. 250,000 is still my number. I expect a flight to quality and decentralized crypto like Bitcoin and for some of the weaker coins to become relics. So, is it crazy? You know, we can look back on Bitcoin, guys. Let me see here. Let me kind of take down some of these things here real quick. You know what? Let's do this. There we go. Okay. So we can look back on Bitcoin here, right? And we can say, okay, so we had 2017, right? 2017, right? Let me get rid of all this other stuff here for the moment. Nothing we haven't seen already. Now, look at this right here, guys. Look at this. God, look at this move up here. This is July of 2017 to December, right? We can go right here and look at April, right? So from April, we'll say of 2017, what is this down here? This is, we'll go from right here. What is this? 10th of April, 2017, all right? To, I believe this is December 17th, right? Oh, this is the weeks. Okay, yeah. So basically December 17th here at the swing high, right? At the all-time high there. I mean, that right there was a rally of 2,096%, right? 2,096%. You know, if we were to get, say, the same thing here off this swing low, you know, and I'm not saying this is going to happen. I'm just saying if we were kind of, you know, look at it and go, well, that's happened before. So it's not out of the park that it could happen again, right? I mean, look at that. That's $330,000. April, May, June, July, August, September, October, November, December, 9 months, right? I mean, so, you know, that could happen. You know, it's happened before. We've had big moves like that before. So, you know, it sounds crazy. It sounds far-fetched. But that's his thought anyway. And it's not out of the realm of possibility, as we've seen here. And, you know, prior to that, we've rallied up stronger in shorter amount of time, right? So, I mean, you know, there's that possibility, right? I mean, we can look right here from September to April here, right? September of 20 to April of 21, right? That was this rally. That, you know, that was 541%, right? Even that right here is still going to get you up there, not quite 250,000, but you're still going to get up there around 100K, right? if you're in at 15, 20,000, 100K sounds pretty dang good, doesn't it? We'll see what happens, guys. We need things to happen right now as we look at this. There's a great potential story unraveling here, a narrative, right? That the bottom started back here in November. Back here in June. This is a terminal shakeout. This is that little range that you get, and we're looking for an impulsive rally back up into this range up here, 19.5, and breaking out above that. That's what we're looking for now. If we can get that, that's a good chance that this is the bottom here, and we're going to rally up out. And everybody and their grandmother's going to miss this. Retail. For the same reason, they missed it down here. Right? So, possible. We'll see. We'll see. I'm not here to give you predictions. We forecast based on models, based on things that are currently happening in the shape of things and structure and other things that we look at. But forecasting is not predicting, right? Forecasting says, listen, here's where we think it's going to go, and here's why, and here's what we need to see to kind of increase the odds as it's moving along that this is likely what's going to happen. If it does this other thing and goes through these other areas, well, then it's likely to head down further, right? Predicting says, listen, I'm going to sit right here and tell you it's going to go up here, and that's all there is to it, right? So I think the sooner as retail traders, you figure out, the difference between them, I think the better, right? Now, coming off here, guys, I think we've got to move up, right? Again, for me, this is a heck of a range here. Do I have it in there? Yeah, there we go. There's the range. And you can see what we've done here, right? So we rallied up, found support around the mid-range, right? Rally up, broke out, found support on top of the range, dipping just right below, right in that area, breaking back out again. We're looking for a break up here, right? What do we have? We have supply that turned to demand right here. If I'm looking at this, I see a huge bit of volume here, right? On this follow through here, you get these volume bars here. On this breakout, this large candle spread here, right across where supply is, that's usually what we label a jump across the creek in an accumulation range. Because you get that strong push up, right? And so far, it's remained up there. It's remained in that area, right? We've kind of built a bit of a range here as well. Now, right at the top of the range here. It should look at something like this, right? Maybe. And so again, a little bit of volume up here at the top. Biggest volume coming at the lows, right? Biggest spikes of volume. So a lot of demand showing up at the lows, not allowing it to really continue further, right? We have this. So we had this breakup. We pulled back, printed a higher low on much less volume, right? We were down here versus up here, right? And that's the kind of thing you want to look for that says, hey, we're probably going to head up. In fact, you actually have what's pretty much labeled here as a range here, and you see that volume dropping off until you get the breakdown below the range low, the spring here in this little local range, and it takes off, right? Rallies up to the previous area of resistance up here. And so this morning then we had this pop up and then this drop down, which has basically hit our first target that we had there in Discord. And so now we're looking to see, okay, can we get some rallying further breakout here? Because if we can, all of a sudden this looks like a 1, 2, 3, 4, 5, right? And so if this is 5, and that's 1, 2 right there, right? Then we're looking up here around 18,160 kind of area, right around the R2 hourly pivot as a target. Now, what else is that? Well, whoops. Let me get back there again. Let me get this on all the time frames here. There we go. So now that gets us up here at this swing high right above the pivot, right? So you'll get a 3, and it may overextend. I would think if we're going to break out here, it's going to overextend. We should pull back to the pivot. So we should get like a 3, a 4, and a 5, which then gets us, that's a local there. Then it gets us this larger thing we're looking at, right? So it's like 1, 2, 1, 2, right? As it continues to build up. So, I did post in there a lot of the alts look the same. So you have your start of a 1, 2, and then you'll have a 1, 2, 1, 2. And what that should lead to is a strong move up, a wave 3, a 3 of a 3 of a 3, right? And that would coincide with the idea that we've got these large candles going down, and we should get a large move back up. You guys used to talk about BARTs and marges and stuff like that, right? Same idea here. You break out through the resistance here and you take off, right? So, it looks to me like we may have like a 1, 2 and then a 1, 2, 1, 2 here. Where do you break out? The idea would be that we get an impulsive breakout above the daily pivot. We'd pull back to the pivot, break out higher, probably hit this 19,001, 19,200 area, maybe this high volume node. Pull back to the pivot again. Ultimately rally up to around the daily R1, and then you get your bigger pullback. And so that would give you 5 waves up to this area here, 3 waves back down toward where the pivot is, 1, 2, 3 up. So big picture, that's what I'm looking for as long as we continue to rally. Maybe this is a leading diagonal here. Maybe this is a 1, 2, 3, 4, 5. Potentially. If we see this continuing to break on down toward this 16,700 area, I'm gonna, that's what I'm looking at. But for right now, as long as we continue to find support here and rally back up, I think ultimately we look for an impulsive breakout above the daily pivot. We retest as support probably a few times until we get up here around the R1 pivot. That'll complete the rally up. We'll pull back down to this pivot. That'll be about a 50% retracement and pop back up higher. And all that time, if that happens, the extremely bearish that are out there on Twitter and other social media will not buy. They'll continue to argue why it's all a dead cat bounce. They'll say, oh, it's going to get rejected here. It's going to get rejected here. It's going to get rejected here. Again, it's all the same thing that you guys saw happen in 2018 at the low, right? 4,000, 4,200 area. Everybody swore up and down it was going to get rejected there and head down below 1,000. It didn't. It broke out really well towards 6,000. Again, there everybody said, hey, listen, this is it, man. It's definitely getting rejected here. Look how long it was holding its support there. Now it's definitely going back down. And, again, we were the opposite right here at TWC. We talked about how easy it would break out and continue up higher, and we gave you the reasons why, right? And it did. So I think, again, if this is going to be the bottom here, I think you're going to see, because you always see that same thing. And most people will continue to see that same thing, and they won't get in until much, much, much higher. A lot of people come in talking, especially in crypto Twitter, about being traders. And really, what they are is they're investors, or they want to be investors. And they want to be investors that if this is the bottom, they bought at the absolute lowest price. And at the top, they sell at the absolute highest price, right? But you guys have to remember, let me kind of show you this here, that tops and bottoms are actually ranges, right? You guys know that, right? Tops and bottoms are ranges. Why is that not showing up on this frame? I still don't want to show you up on all the frames here. Just a minute. Let me see if I can get this. Visibility. All intervals. Hey, there we go. Oh, because I was looking up here. All right. So, again, tops and bottoms are ranges, right? Which means basically if the high and low, what retail often refers to as the top and bottom, are actually just events. And I don't care how long you've been doing this, you rarely catch them, right? Retail would be so much better if they concentrated on ranges for the lows and ranges for the highs with the understanding of what goes on there, which again is why we teach Wyckoff at TWC. You don't have to show up for the Monday class. You don't have to. You don't have to go through the educational videos. You don't have to. But even if you're not going to be a pure Wyckoff trader or a pure Elliott wave trader, understanding the basics of them, understanding on Wyckoff how ranges form and why, understanding on Elliott wave that there is that price action is not random, that people act in ways in which can be shown, right, in known ways, and how corrections work, especially with Elliott wave, right? How corrections work. And then you start just that overview of information, you start understanding, and then you start seeing how Elliott wave and Wyckoff actually work, right? So Elliott wave pulls back, presents a range, right? Like a wave 4, say a flat correction. And you will know based on Wyckoff how that's going to play out, but it aligns with how you expect it to play out with Elliott wave, right? So that's why we do this, guys. It isn't there to say, listen, you need to do this so you can become an Elliott wave trader. You need to do this so you can become a Wyckoff trader. I mean, you can. That's great. But I do it because I want you to see how all these things play together. Price action, Elliott wave, and Wyckoff, because it gives you an understanding, and you stop FOMOing in, and you stop getting scared and jumping out at the lows. Because you have an idea of what could potentially be happening before you get into the trade, and then if something different happens, you don't freak out. You're like, oh, okay, well, that just means this. So either I need to get out or I'm probably good, right? So that's why we do that. But, again, if this is Wyckoff here, what I teach our members, right, is that this would be, so you got phase A, which is the stopping phase. Phase B is the building of a cause. Phase C is your last test of the lows. Phase D is your interior markup. Phase E is your exterior markup. Now, with phase B, you generally have a channel that most of the time comes from above the range and leads to below the range, spring or a terminal shakeout. And so what we look for is a breakout above that. Now, sometimes the range will actually be more, within the channel, you'll have like a wedge. So it'll make like a high, and you'll have, something like this here, right, that continues down. In this case, you had the big move up, and then the drop down because of the terminal shakeout. So really, we're looking for a breakout through this descending resistance. And so if we get that, rally up to 19.5, that's why I keep talking about 19.5, guys. If we're getting that rally up to 19.5, there is so much evidence in that case that this is a bottoming accumulation structure, and we're looking to head out. Now, it doesn't guarantee it. It still doesn't guarantee it. There are no guarantees in trading except that you're going to lose money at some point, okay? But being a successful trader is understanding what's going on, and you're adding things. You know what to look for. You're saying, okay, well, as I've talked to you guys about the swing lows, the comparisons in volume and price action on the weekly and the monthly, and how that sets up this possibility that we may have this bottom forming here, right? Those are things we look for. Again, they don't guarantee, but those are the things that we generally look for. And if we don't see them, we're hesitant about saying maybe it's a bottom. But if we are seeing them, then that increases the odds that it may be, right? So again, this is something we're looking for. You'll notice, I mean, look at how this range ends up right here. Basically breaks out, finds support, looking to get some movement up maybe, right? So that's what we're doing, guys. Let me see here. You guys talking about soccer, or for my friends on the other side of the water over there, football, right? Let me see here. I'll be honest, guys, I don't watch much sports anymore. I used to be a big sports guy, grew up playing sports, and just became really frustrated with the whole, always issues with money and whatnot and the way it all plays. But what's his face is getting $328 million to play baseball next year, right? He's got that contract to re-sign that contract for $328 million. Man, there's inflation for you, right? Man, imagine him getting that kind of contract, and then we get disinflation or deflation. Man, oh man. Good for him, sucks for them, right? Brian Riley says the only guarantee is trading is Twitter trolls saying have fun staying poor, right? Let me see here. Okay, so there we go. We've got this kind of thing going on, right? And so that's what I mean. That's what I'm looking at. Nothing's changed, guys. I still think this looks like a good likelihood of a bottom forming. But what we would expect to see now is a nice impulsive rally up mid-range here, up there, that 19,000, 19.5 area. A rally up there, a pullback, rally up here toward that R1 pivot area up here, pull back to the daily pivot. And by the way, you'll notice if we get this, right? Look at what we'll do. If we get this, it'll just bring us back and retest resistance is support, right? Before we rally up higher. So yeah, you know, if we get this kind of rally on up and through here to this area, right? And then we come back down to the pivot. And then we'll get that move out, right? Again, looking at this area with a breakdown to that swing low there. See, here's the daily pivot. Look, it's right there at the 50%, and that's taking it right there above the, you know, the R1. Right before it, it's still 50% area right around the pivot. So yeah, that's the expectation. We still need to see it happen, though. We need to see the impulsive breakup back into the range here, impulsive breakout above the daily pivot, impulsive breakout above the descending channel resistance. We need to see those things. By impulsive, we mean big volume, large candle spread. Again, we're talking about this right here. This is impulsive. You see that big spike of volume and that big candle spread right there? That's impulsive. That's what we're looking for on those breakouts, okay? Something similar. Again, impulsive right here. Same idea. Again, impulsive right here. Okay? We're not looking at this little meandering sideways, kind of overlapping price action through it. It could still continue up, but most of the time when it does that through resistance or support, it means that it's really not going to continue following through. It'll reverse. So that's why we talk about wanting that impulsive move. Is 35,000 by the end of February possible based on your wave counts? I'm not a big fan of doing time because time is a very, very difficult thing and rarely comes right. How far would that be from here? From where we're at right this second, 35,000. Man. Where's February? Let's go back. Let me start back here from getting into December. And so there's the end of December, January. Right around there is February, right? Just gonna check this out here. I mean that's a that's a lot. I can't say that it's not possible. Again, I've shown where we had those big huge moves, right? See, unless we're overextending here, I mean we're only looking at 28,675 gets us 5 waves off the bottom on that larger degree, right? Which, as you can see here, gets us where? Gets us right below. Right, that support, right? So that gets the idea we've got a 1, 2, and then we get that 3, 4, 5 kind of thing. I don't want to say no. I don't think it's going to happen by then. I would if the bottom's in, right? If the bottom's in, I think that's a little early to get that much rally. I would be looking for that probably later into like end of Q2 maybe. So or maybe maybe even May. I mean if it really took off, but we're looking for impulsive movement through here. There's a lot of overlap here, which should take a bit. We got more impulsive movement through here, so that should be an easy move. But we do have to get through all this here, and that's going to take some back and forth breaking up through it. I think February is too early. But again, crazier things have happened, right? Does that make sense, guys? Crazy things have happened. There's a crazy Dutch guy on Twitter. Is that Hank? Oh, he says there's a crazy Dutch guy on Twitter calling 100,000 till the end of this year. Oh my gosh. Yeah, 100,000 end of the year. I mean, I can't guarantee anything, obviously. But man, oh man, that seems way far-fetched. I mean, we're talking 21 days, 22 days, whatever left to the end of the year, right? 3 weeks to go from 17,000 to 100,000. I don't see that happening. I mean, that man, oh man, that's just crazy. I don't usually keep up with a whole bunch of other people out there, but man, you'd be talking about, yeah, that's that 500% rally up there, almost 500% rally. Now, you know, the crazy thing about that, you know, I think some people who are saying something like that might point to this here. But this here is in, you guys have to remember, this here is the last stage of that blowout after this long rally, right? Here, we've had nothing but pullback all that time, right? So if somebody out there is saying that and they're saying, oh, look how quick we went up here, I would say, you know, I would say, no, that's not the same thing, because this is the end of this structure here. It's the natural end, right? The natural progression of this this curve here, right? This, on the other hand, has spent all this time going down, and that would just require some big old huge thrust all of a sudden, and it doesn't make a whole lot of sense, right? Does that make sense, guys? Yeah, I mean, theoretically, you know, pretty much nothing is impossible, right? Science finds out time and time again how wrong they were, right? But, you know, realistically, I think that's some real big hopium. And I don't usually use that word because, you know, I'm a little bit disrespectful, but it's just, it's crazy. I think it's just an absolutely crazy target. And I would almost suggest that maybe if they're saying that, it's because they're trying to get people to watch their channel, to subscribe to them. Because, you know, again, a lot of people out there believe no news is bad news. As long as you're being talked about, that's a good thing, because you're in the mind of the consumers out there. You're in the mind of retail out there. Followers, right? I don't necessarily completely subscribe to that notion. But yeah, so we're looking at. So yeah, if we continue breaking down, you know, again, looking around that 16.9, you know, maybe down here, 16.9, 17,000 area. If we break down, you know, below the swing low here at 16,817. Oh, I'm sorry. Nope, that's the high. At 16,679 and a half. Well, then I think things start looking kind of interesting. Then things start looking like, okay, maybe this has been some sort of ABC off the bottom here, and we're likely headed down to a new low. Okay, that would be the first kind of clue I'd look for. But as long as we remain above that, I think we continue to look higher, right? We really want to see in this range here. If we come down to this area, we want to see what happens with volume and price action down here. But those are kind of things we're looking at there, right? January flash sale. Well, I don't know. I don't know if we can use the usual seasonal stuff, right? Because 2022 has been a much different year, right? 2021 and 2022 together have been like a different 2 years than what we've ever seen, right? So I don't know necessarily that seasonality is going to play a big part in anything right now. But, you know, we'll look, sure. You know, always want to watch, right? What usually happens during those months. You always want to pay attention, yeah. I'm just not necessarily sure that it's going to do that. Let me see here, guys. So real quick here, figs. I posted this on Twitter not too long ago. This is the chart here. I said, you know, on this, whatever day this was, I guess it was the 2nd. And I said I was looking for a breakdown toward the pivot, and then looking for an impulsive breakout higher. That looks like what we might be getting. Daily looks like it wants to curl and cross bullishly. 4 hour down and oversold here, crossing bullishly, right? We'll see if we can get it. Right now, let me see here. Kind of zoom out here a little bit more. Big volume on this break through this area right here. So if we're pulling back, we want to kind of see it hold this area of support, this candle right here, because there's so much volume that came in on that, right? But that looks like 3 waves up right now, which means, you know, again, could kind of head lower toward that daily pivot. Well, man, that's 1618. I was thinking it was only 100%. Man, was my view off. So yeah, I mean, let's see here. What do we got here? We've got a 50% pullback at the moment. We're just getting you know, a curl here. We can get this one more push up higher here from this area. You know, this would be wave 4 on the pullback here. And yeah, we should. Yeah, exactly. We should be looking right here into the EQ, right, of the wick here, right there around $8. So yeah, if we can get a rally off this area where we're at, or just maybe even this wick down here, just slightly lower, you know, that gets us up in here into this $7.93 to $7.99 kind of range right there. That would give us 5 up. Yeah, hourly pivot doesn't make much difference because that's going to be gone today. This is stock market. Hourly pivots are based on weeklies, right? They work for the week, that's it, and then new ones come out the next week. So yeah, you know, we get that. And basically the expectation would be just like this breakout to there. And then first target, second wave, first target is always wave 4 the lesser degree, right? So this would be 1, 2, 3, 4, 5 gives us 1, 2. And you can see this is all high volume node here, especially if we bring in more information here. You can kind of see how this works. So again, you know, pulling into there makes a lot of sense. It is above the daily, though I could see it continuing down to the daily. So let's kind of zoom back in there again. Man, that looks like just 3 down there. Well, yeah, it looks like just 3 down there. So yeah, we'll see. If we break down obviously into this area down here around 7.5, that's going to lock. That's going to suggest this is going to be 3. If we break down below this swing low here at 738, that says this is 3 waves up, and so we'd be looking for further down. But again, you know, my idea was we get toward the pivot. Did it get front run here? We'll see, right? It looks like 3 down here on this. But if not, again, we will still look for it to target this pivot area around $7.05 or so. And then we'll look for that breakout up. But yeah, we'll see what happens here. Let me see. I mean, we basically 50%, right? I mean, if this is 1, 2, and this is 1, 2, 3, 4, 5, gives us 3, 4. I mean, it says we're done, right? And in that case, from that area, we'd be looking for this breakout up here to around 978, right? Which puts us where? It puts us right here at this area of support resistance right there, right? So, I mean, I think FIG got some potential still here. We definitely want to see it follow through. Yeah, see, and then you'll just test it, right? So I put this big one here, but, oh, no, let me leave that on there. That was the one I drew. But yeah, you know, this is overall saying, you know, we get an impulsive breakout there and overall continue up. More locally, though, it would be this idea that we kind of break down, rally up here, break down, and head up higher, right? So yeah, nothing happens overnight, though, guys. I think unfortunately, a lot of you know, crypto guys came in and, you know, markets move fast and whatnot there. And so they expect great returns in very short amounts of time. So they go waste money with people out there promising them that. And then they wonder why it happens rarely, right? And then they feel like, oh, I wasted my money. And had you just gone on and actually learned how to trade and actually learned how markets work like they do and actually learned that the real secret sauce, guys, the real thing is that time and compounding get you where you want to go in terms of wealth creation. Your only, guys, you listening to this? I'll say this one time here, okay? Your only job as a trader is 1, protect your capital, which means proper risk management every single time you trade. And number 2, right, lock in profits consistently. Those are your only 2 jobs as a trader. It's not to ignore your rules and, oh, it's going to continue going up further, or oh my God, what if it continues going up and I miss some of it, and so you don't get out? Your job is to protect your capital, proper risk management. I said I was going to say it once. I'm going to say it again, I guess. And 2 is consistent locking in of profits. If you can do those 2 things, guys, doesn't matter how you approach the charts. If you can do those 2 things, time and compounding, we're going to take care of the rest. You are not going to get where you want to get with wealth in one trade. You might get lucky. Then again, you might get lucky buying a scratch off and winning $1 million, right? You might get lucky in Vegas and get on a roll and win $1 million. You're not going to usually do it in one roll, right? Maybe you're playing slots and you get lucky on a pool and you win $1 million, right? But come on, guys. How realistic is that? Do you really believe that it's going to happen? Or do you go there thinking, man, I'm just going to go have some fun and hopefully I can win some And that's what you want to do, right? Or do you go over there when you buy a scratch-off ticket, or you go there to Vegas? Do you go, there's no way I'm not going to win that? Because I'll tell you what, I'll tell you exactly how you've done. If you believe that you're going to buy that scratch-off ticket and it's going to win you $1 million, that $2 scratch-off ticket, then you've lost every time you've done that. If you've gone to Vegas and you pulled the slot machine and you said, man, I know when I put in this nickel, I'm going to win that $1 million grand prize there. I know, just this one pull. I know you've lost many nickels, right? And if you use that same mentality with the markets, I know you've lost. Overall, you've lost money rather than made it. It's just the reality of it, guys. We got to get through our own limiting beliefs and those things that we do and say that keep us from being successful. Again, that's a big part of what we're going to do with the mentor program. Get you through all that. It's still work. I've been doing this, again, guys, 27 years now or whatever. And it's still a work. I can't just sit on my rear end and pretend that I never have to work on the emotions, or I never have to work on the psychology. You always have to, guys. It's a never-ending thing. Because as human beings, we tend to continue. Those things are easy to screw up, right? Just because we've been doing it one way for a while doesn't mean, where we've been working on it and we've overcome the issue with the emotions and the whole psychology thing, and we've been trading real well. Man, I'll tell you what, just stop practicing that for a day or two or a week. See what happens. You have to constantly work on it. All right? You're a multimillionaire in sats? Let me see here. Let me kind of catch. Okay, so there's figs or whatever. Another one I'm watching here, guys. You've seen me pull up. I think I pulled this up on Scott's show recently. Big picture with Dot. Big picture with Dot is that we've got this kind of wedge going on into support here. This large high volume node area, right? So what are we looking for? Impulsive breakout above the pivot on the daily, and impulsive breakout above that descending resistance. If we can get that, I think that's probably saying, hey, the top's in, or the bottom's in. I was thinking about the top right here. Resistance right there, right? But I think there's a good likelihood that the bottom's in. And again, what we would see is this rally up to the R1 pivot area, which, as you can see, is this previous resistance and support. And we pull back to the pivot, and we break out higher. But quick chart here, that's what I'm looking at. If we continue to break down lower, we might see a quick dip, maybe the weekly or something, a wick here below the wedge support, a throw under that targets the S1 pivot area, dips just below that swing low over here, right? This one right here, hits that one, and then right back into the wedge. So if we saw that, then I think that's probably a higher confidence trade, and you just put your stop loss right below the swing low, and you look for that big move up. But right now, I mean, there's a nice little wedge kind of forming there, right? Might even be a bit of a channel. What do we got here in terms of channels, maybe? Oh, yeah, look at that. Look at that beautiful channel right there. Look where we're stopped. Excuse me. Right here at the EQ. So if you can get a bullish breakout above that EQ that stays above it, target should be the descending channel resistance. Bullish breakout through that. That's a good big clue. The bottom's probably in, the low point's probably in, the lowest price is probably there. We're heading up. No guarantees ever, but those are the kind of things, again, those types of movements in those types of areas that we look for to suggest, hey, thing A or thing B may be happening. Let me see here. Litecoin's another one that I've been talking about for about a month and a half now, guys. Right? Let's kind of bring this down. So we got the big chart on here. And so I think I've been talking about it since about the end of October or so. Somewhere maybe right around here. And here we are continuing to go up. Now we're sideways on the daily between the R1 and the pivot. If we come down to the pivot, I want to look for it to hold and break out higher. And if we do that, I'm thinking we're rallying up. It won't happen all at once. But I think locally, if we're breaking out above this 85 kind of area here, I think locally, I think mid-90s. Yeah, I think it's just right around just above the R1 pivot. I think is a good target. But I think, I think we're headed up above 100. I think we're heading up above 100. So, yeah, I mean, again here, I would look for this rally on the breakout here to the R1 pivot area. Potentially a pullback down here toward, I don't know, probably even this right here, right? It's kind of wick down here. All that, doggone it. All that demand down there in that wick, right? And it's right there on the pivot. That's a big thing. There we go. So yeah, you know, if we can get this breakout toward here, we'd look for maybe a pullback here and go up. Now, if we break out impulsively through the R1 and keep going, oh man, that's the bullishness you're looking for. Moving it sideways between the pivot and the R1, never come back and test the pivot, but just instead impulsively break out above the R1. Usually you're heading up here to the R3 at least, and most often the R4, R5. So that'll get you up there around almost 130, right? So again, you know, that's what we're kind of looking for here, if it kind of comes out through there, right? Dollar, guys, dollar. What's going on with the dollar? Look at that. Again, we've talked about the idea that we got this almost 40-year, I think it's like 37-year resistance here. Here on the monthly, again, we broke out and closed right around it. Small little doji with a lower high, and then big supply spread candle coming in. So, you know, suggest maybe a reversal. It's a pause, maybe a reversal. Then we get this, definitely a reversal. We've come down to this support here. Anybody that's out there that's bullish on the dollar, they're bullish because of this support right here. For me, the important areas really are kind of this range right here, 101.76 to 103.15 kind of area. And then this orange area, but really this kind of interior area here at about 95.66 to 96.735. With this breakout, though, coming all the way back down in here, I think all you get is a rejection and further down. If we're watching this right now, what do we notice in this range? We notice volume dropping off to the low, right? We notice volume dropping off on the rally, and then suddenly a huge bit of volume coming in, right? At the top here. And so we dropped down, we rallied back up and got rejected again, follow through lower. We did have this volume pick up on this break here into this area, still sent us back down, but then eventually broke out. But then we get, again, at the very top here, there we go. We have this ugly-ish looking candle here with this ugly follow through the other side, and we have a spike of volume, right? We had increase here, increase, and then spike. We spiked at the top. So again, my thought is, I think ultimately, I mean, I could potentially see something like this, right? But then we come on down here, and I think we just kind of come up here and break, and then we come on back down. We might get something like this, but I think we break down, we come back up, and then markdown begins. Now I've got this drawn way down here, obviously, you know, well below it and everything. But I think there's a good chance that we could see that breakdown. If you just want bigger pictures here, again, it's this high volume node right here, around 95 to 97 and some change. And it's this high volume node down here, probably around 80 to 81. Now, if we instead, if we instead get a rally and a breakout here, then based on where we are right now, we're looking at what, that 121 area, 121 and a half. Yeah, about 121.4 kind of area as our initial target on that. The idea being that this would be a 1, 2, this would be a 3, 4, and that would be a 5. But, you know, so again, so we're going to sit here and see what happens. If we zoom in here to the daily, again, look at the daily here. Hasn't broken down and oversold yet. It's just kind of hobbling along here. Support's right around the same area. Lower highs, right? You know, you look at the RSI the same way you look at price action, right? And so you've got price, or here, DXY continuing to fall further, right? In that area. You know, looking at the daily generally, coming in again, just the opposite of what we're looking at the other way in the other chart, right? Coming in sideways between the pivot and the S1. If you're not testing that pivot, you should be targeting this S1 area. If you can get a rally up off that, I mean, right now we got the high volume node around 106. You break out through that, potentially up to the daily pivot. But I would look for that rejection there, continue on lower. If instead you get some kind of just this little bounce here and you get this impulsive breakdown through the S1 pivot, then like we were talking about with the other one, should be looking to come on down toward that S3 on the daily there, okay? So, that's kind of what we're looking at as we play here. I think this looks like a 3-wave bounce locally here. Looks like a WXY. So, W, X, and Y here, right? Or, see, there's kind of this thing here. And then, again, maybe another W, X, and then 1, 2, 3, 4, 5 here. Get you the Y, right? However you want to cut it, though, this looks like 3 waves up. This right here, you have a low, you have a low, you have a low. That's 5 waves down. So, again, could see some rally up here, but this does appear to be some kind of leading diagonal here. The only other thing that changes that is if it's a 1, 2, 1, 2, and then this is 1, 2, 3, 4, 5, right? So anytime you have a leading diagonal, you want to also take the position that maybe it could be a 1, 2, 1, 2, okay? But, if it is a diagonal here, generally price should then rally back up toward this kind of area here where you have all this price action happening, or where that wave 4 is. And you have it down. If we're going down from here, I think it may be just a 1, 2, 1, 2 coming down further on that. So yeah, I mean, again, looks like ABC up here coming down, right? Mid 80s, Hank. I think it may be coming, buddy. DXY there, right? Let me see here. Oil. Let's look at oil here. Oil just continues to break down. I've got another chart. I'm looking at another chart. I'm looking at a much bigger picture. Let me see here. Let's see if I can find it here real quick. Let me show you this. Oil. There we go. Alt, very bearish. Now, this may take you some time to wrap your head around, all right? This is a big thing here. But what if? So I went back. And so I'm assuming maybe. So here was the thing. When we originally did this, I figured we'd have one more, that this would be like, like a B up, and we'd have further down, right? And how that would work is basically this here, right? So the idea that maybe this is a 3, right? And this is a WXY for a 4. Because it looks like an ABC and an ABC here. And then maybe this would be a 5, and then this would be an A with a triangle as a B. It'd be a C, right? But this ABC, this is going to really kind of, you guys go, nah, there's no way this could happen. And then, maybe not. But this is something I'm definitely watching, right? All right. So the idea here, and we can't get down because it's like way down, it's log chart, so it just extends down forever, right? But the idea, this is an A, B, C, maybe of an A, right? And then coming up here, let me zoom a little bit better here. See the count a little bit better. Then coming up off that May contracts low, was it May? I think it was May 2020. We've got an A and a B and a C, and that finishes wave B. And now we're in this wave C. How about that? So that would suggest another really bad contract area. And how could we see that? If the economy goes into some sort of recession, big lack of demand in products. We already know that companies are pulling back. They're not producing as much. We know that travel's down, right? When we're talking about PPI, when we're looking at that, travel via airlines and cruise ships is down. That was one of the things that was overall pulling it down, right? I don't know. That becomes crazy then maybe, but we get some really bad thing that happens, and now we got this. And now, does that mean it has to go all the way down to where it was? No. Not as far as it was, but man, oh man, wouldn't that be something? It gets near zero again, and everybody goes, oh my God, I know what happened last time. And that just causes it to happen again, even worse. With that big negative close, right? First time ever in NYMEX history. I think since '82 is when the NYMEX came out. So I am also potentially watching it. Now it's going to take some time to play out. But it just continues to look weak here. It just continues to look weak at the moment. The daily is just now starting to dip into oversold. So again, the idea would be that we've got this 1-2 here, and then 1-2, 1-2. We'll get this 1-2. And what we look for is a bigger wave 3 move down. So that'll get us moving down pretty quick in that. For those of y'all driving anywhere or buying anything, you'll like that because, prices will go down, right? As far as the weekly goes, haven't broke down into oversold on RSI. Stoke RSI remains above oversold. You can see that we are at the weekly pivot at the moment. Jumping into the monthly, same idea. Have not broken down into oversold. Now, what you can say about the monthly, can we say it? Nope. I was looking at the idea that maybe we have some sort of hidden bullish divergence here, but actually this gets you from here. No, it doesn't. Where does it get you? Oh, it does get you from... Oh, but that was that to that. So this hidden bullish divergence right here led to this rally. Dip down and rally. But so you can see that this is not the low here. And you need this to be the low to give you proper divergence. But what we do see is that momentum is breaking down. May not be quite divergent, but usually if we have it like this, it's a good clue that we're going to break down below this kind of area here where we would have had that divergence starting if it was at that low. So yeah, I mean, again, guys, I've been talking about the idea that this was likely the top up here, right? And even potentially a double top here as we come on down. Still looking like it right now. Would be a crazy one, right? Isn't it more logical to look at oil futures? This is oil futures. Yeah, it's a continuation chart. Yeah. That's what this is. But yeah, so I mean, again, as we're looking at, I don't know, we can look here. What can we look at here? Maybe quarterly? See what quarterly looks like? I mean, there's quarterly. No bearish divergence because it's a lower high. But quarterly is just now starting to break down, right? Now, it may not mean a whole bunch because we had it over here break down. And it was just this small bit here, and then it rallied up higher. So maybe it doesn't mean much. But yeah, again, just potentially something to watch on that, right? I think the other way you potentially look at this is as a really large throw under of a wedge of a leading diagonal. So A, B, C down is A, B, A, B, C down is B, C, A, B, C down is 5, right? I'm sorry, 1, 2, 3, 4, 5. Leading diagonal, we've got an ABC potentially up, and 5 more down, right? Man, oh man, but there it is. I mean, you can see again where all the volume's coming in, all in this leg right here that leads down. A lot of, as we continue to rally up almost to that all-time high around 140, volume just continued to drop off, right? So there's nothing really, really positive looking on this chart here. Oh, look at the yearly. Oh, hammer. Stop. Hammer time, right? Look at that right there. Very large upper wick. Let me get rid of the pivots here. Look at that. That is the yearly. Wow. So the last time we had something similar to that was this right here in 2000. Oh, what happened in 2000, guys? Going into 2001. We had the tech bubble, right? .com bubble, right? Man, so okay, and so this one actually dropped down. How much did we lose on that? Ah, wrong one. There we go. That went down for the next year. It went down about another 36% or so. Let me see here. So anything similar, let's say we closed out the year here. That gets you right there around the 44 level. So again, if we were just to do that, well, I mean, that still kind of gets us, you know, where I've been talking about, right? Mid to lower 40s, right? So that would still kind of get us there. But yeah, I haven't looked at the yearly on this, and that is a heck of a yearly candle there. So we'll see how the rest of this year finishes out. We've still got another 3 weeks, right? But I think best case scenario, maybe a doji here. And a doji means pause, potential reversal, right? That's crazy. Fibbo says we had to have the negative in oil to throw off the axis on all our charts. Yeah, right? Exactly. Exactly. So yeah. Let me see here. Man, what's going on, Silvio? Good to see you, buddy. Now, if we look at, what? Brent? Oh, I got to get out of here. Oh, my gosh. What's, oh, QM1? What's today? 9th? All right. Telling you guys, if you're not dating your charts and you got a lot of the same chart in there, good luck finding it out. Right? All right. E-minis. Looks the same thing. I mean, yeah, it didn't go quite down as far, but nonetheless, still the same thing, right? Still the same thing, still a big negative drop, right? So, oh, this is light crude. Yeah, light crude. But I mean, you know, again, the idea runs the same, right? The idea still is that maybe A, B, C coming in, right? Look at the volume on that monthly high there. Look at that. And so, you know, again, you have that same type of thing. We're looking kind of like on the monthly there. It rallies up, but then gets rejected and heads on back down, right? E-minis don't have physical delivery. There you go. So yeah, I mean, you know, again, you know, whether you look at this kind of like you know, maybe 5 up, large triangle, so A, large triangle, B, C down, and then A, B, C up, and then you look for 5 down, or whether you look at this maybe as 5 down, 3 up, and then 5 more down. I mean, you know, there is definitely a bearish potential count on that. But we would have to see much further movement down to really kind of, or, you know, some sort of movement that works and says, yeah, that looks like it, right? I mean, if I'm looking at this contract right here, I'm seeing 5 waves down, suggesting a bit of a rally, a 3-wave rally probably coming in, right? Where's that second wave down? Yeah. So, I mean, you know, 5 waves down to the pivot makes a lot of sense, right? Then you rally back up to the 4th wave, which would be this 92, 93, 94 area, right? And then you come on down further. And if it's an ABC, then that gives you an A. You get your B up there, and then you have your C down right into this 50s area, right? It's high volume node. And then it rallies back up, and everybody feels okay, and nobody's freaking out, right? So, yeah, in case you guys didn't know, Fibbo in his real life is all about energy with what he does. So yeah, used to be cattle, right, man? That's why I like him so much, man. I'm in Texas. 2 big things out here are cattle and oil, right? That's what he's cut his teeth on and done for all his time here as a in his professional world, right? But anyway, nonetheless here, yeah. So I definitely see some, possibility of some pretty potentially negative stuff, right? I'm not a big fan of Head and Shoulders, but man, oh man, you can't unsee it, I guess, right here, right? Possibility. Then you get that move up there, about there, right? And I was talking about. And so if you get that, based on that Head and Shoulders, you've got a target of about $66 below the breakdown. Where does that take us? Oh, look at that. Man. Takes us right here to this demand right here, where this demand structure was. We dipped right here and rallied back off it strong. We hit the EQ there, pulled back, broke out, came back, retested. So this is demand here still. And it takes you right down into it, low 30s. So I hate Head and Shoulders because it's so easy to misconstrue, but it's hard not to see it there. So if we do get that breakdown, I mean, there's a pretty good target on that, right? Cattle and grain futures and options trading was the first dip in the commodity world a long time ago. Yeah. GNC, what's up? He says 13,000, then moon. Well, we'll see, right? It's got to do a lot of work to get down to 13,000 right now. So we'll see what happens with it. For now, as long as we're above, that hourly pivot, as long as we're up here above this range resistance here, the idea is we'll head up, right? There's your high volume node right there. Kind of finding support in that. What we really want to see though is we want to see an impulsive breakout here above the pivot. We want to see it rally to the R1 and pull back. This right here is your 200 MA, or this 200 EMA, I'm sorry, on the daily. You can see it providing support right now on the 1 hour. Right? You had this small range here. That's what we were talking about earlier. You had small range. You had your spring here below the range. Gave you a key to rally up. 4 hour, we ran right into it. So if we can overcome this, become support, that again gives us more help on those larger time frames, right? It just says the shorter time frame is more bullish over 200 periods. You've got that, it's the EMA. So you get that that weighted front end versus the moving average, which is just the same weight for every 200 price point, right? So there we go, man. I got to get out of it. You guys keep getting me here longer and longer. By the way, hey, listen, we're finally getting to that point where I'm going to start bringing on guests on the show. And so that's exciting. I'm going to have Greg reaching out to people. So if anybody out there is listening and they get an email or a I guess it'd probably be a Twitter DM or something from Greg talking about it, it's legit, and we're going to get that figured out and set up. And yeah, so there you go. Like I said, lots of stuff coming on here, guys. Man, make sure you check out our mentor program over at howtotradetowin.com/holiday-sale. Get in close, like I said. I don't even check my email yet. Maybe somebody's already emailed me. But, like I said, we did have that member who donated $950 to the next person. So who joins that program. We do have financing options. But again, they'll get $950 off the discounted price. And then I have, because of that kindness, he inspired me. So I am going to offer in kind the same thing. So the next 2 people that join, that email me there and join, are going to get that $950 off the price, off the holiday sale price. So thank them. I'm going to tell you, some of y'all know them. They're in tier 3. They're in the mentor program here. They're going to be. So you guys are probably talking to them and you don't even know it. Anyway, guys. All right. So there you go, guys. As always, remember, the only thing you control in the market is how much you lose. That's it, guys. So keep working on that risk management. And, man, look for them higher confidence trades. Don't enter just because. And be sure you're consistently locking in profit. If you can just, guys, incorporate all of that into your trading. I don't care how you trade. incorporate all that into your system. And if you can do that, you know, you've done everything you possibly can on your own to increase the odds that you're going to be a successful trader, right? You got to do those things, guys. If you're not doing them, you're not going to be. I'll tell you right now. Okay? All right, guys. I hope you guys have an amazing weekend. Yeah, I'm going to reach out to them as we get this more figured out here, Hank. All right? All right, guys. You guys have a wonderful weekend. Discord, I'll see you guys out there in just a bit, okay? Take care.